The United States just made Canadian aluminum 50% more expensive overnight. And if you're paying attention to the news, you've probably heard it spun one way. This is good for America, bad for Canada, end of story. But here's what most people don't realize. The reality is far more complicated than that headline suggests. See, American automakers, beverage companies, and manufacturers aren't sitting in Canada celebrating this move. They're actually panicking. Some are already running the numbers, and those numbers suggest they could end up paying billions more. So the real question nobody's asking is this: could this tariff actually backfire on the United States? Could the country trying to protect its own manufacturers actually end up hurting them instead? Stick around, because we're about to break down exactly how this trade war could reshape North America's entire aluminum market. And more importantly, who's actually going to pay the price? Before we get to the point, subscribe to Capital Current for daily updates. Let's start with the basics. The U.S. government just imposed a 50% tariff on Canadian aluminum. That means every ton of aluminum coming across the border now carries a massive tax on top of its normal price. Now, not all aluminum products are hit equally. The tariff primarily targets raw aluminum ingots, sheets, and semi-finished products. The stuff that manufacturers use to make everything from car parts to soda cans. Some specialty aluminum products might be partially exempt, but for the vast majority of Canadian aluminum shipments heading south, this 50% increase is very real. Why did the U.S. government do this? The official reasoning comes from the America First playbook. Boost domestic manufacturing, protect American jobs, and reduce dependence on foreign supply chains. The argument sounds straightforward. Support American aluminum producers, grow American plants, create American jobs. Canada's response was immediate and predictable. Canadian officials called it unfair, disproportionate, and a violation of existing trade agreements. They're already threatening their own retaliatory measures. And honestly, from Canada's perspective, they have a legitimate complaint. But before we get into Canada's response, we need to understand something critical: why this tariff might actually backfire spectacularly on the U.S. economy. Here's a fact that might surprise you. Canada is America's largest single supplier of aluminum. We're not talking about a small fraction of the market. We're talking about over half of all aluminum imports coming directly from Canada. Let that sink in for a second. More than 50%. And there's a reason for that. Canadian aluminum isn't just cheaper than alternatives, it's way cheaper. Canada has something the United States doesn't have in abundance: massive, reliable hydroelectric power. This allows Canadian smelters to produce aluminum at a fraction of the cost of most competitors worldwide. It's not just about labor or proximity, it's about physics and geography. For decades, the U.S. and Canada have built an integrated supply chain around this reality. American manufacturers have structured their entire operations around the assumption that affordable, high-quality Canadian aluminum would always be available. Factories are positioned in the Midwest, specifically because they're close to Canadian sources. Logistics networks were built around this trade flow. Pricing models, production schedules, supplier relationships, everything is built on this foundation. This isn't a recent relationship. This is decades of integration. The two economies have become deeply intertwined when it comes to aluminum. Disrupting that isn't just a trade move. It's disrupting the physical architecture of North American manufacturing. So here's where the reality check comes in. If the U.S. wants to reduce its dependence on Canadian aluminum, there's a massive problem. The U.S. doesn't produce enough aluminum to replace Canadian imports. Not even close. Current U.S. aluminum production covers only about 40 to 45% of domestic demand. That's it. The other 50 to 55% comes from imports, with Canada accounting for the lion's share. You can't just flip a switch and make up that difference. Could the U.S. build new smelters to close that gap? Technically, yes, but there's a catch. Building a new aluminum smelter takes years. We're talking 5 to 10 years minimum, not months. These are massive industrial facilities. They require enormous capital investment, environmental permitting, workforce training, and infrastructure development. Some proposals are on the table, but even if construction started tomorrow, we're still years away from meaningful new production. Meanwhile, what's a manufacturer supposed to do today? They need aluminum now, not a decade from now. So what are the alternatives? Well, the U.S. could source aluminum from other countries. Australia, Norway, Iceland, they all produce aluminum. But here's the catch. Aluminum from these places is significantly more expensive than Canadian aluminum. Add on shipping costs, tariffs from those countries, and suddenly you're looking at prices that might actually exceed the 50% tariff penalty. And it gets worse. Transportation costs matter in heavy industries. Shipping aluminum from Australia across the Pacific is expensive. Shipping from Canada across a shared border is cheap. That cost differential existed for a reason. It made economic sense for both countries. So American manufacturers are stuck in a bind. They can't make their own aluminum fast enough. Alternatives are more expensive and logistically complicated. And the one reliable, cheap source they've always counted on just got 50% more expensive. This is where the backfire starts to look very possible. Let's talk about the real-world impact by looking at specific industries, because this tariff doesn't exist in a vacuum. It touches nearly every sector that matters to the American economy. Start with cars. A modern vehicle contains dozens of aluminum components: engine blocks, transmission housings, suspension parts, body panels. Automakers have spent years redesigning vehicles to use more aluminum, specifically because it's lightweight, which means better fuel efficiency, which means lower emissions. The entire industry has pivoted toward aluminum as a cornerstone of modern vehicle design. A single luxury car can contain hundreds of pounds of aluminum. Multiply that across the millions of vehicles manufactured in the U.S. every year, and you're talking about enormous quantities of material. A 50% price increase on that material flows directly into manufacturing costs. Those costs get passed to consumers through higher car prices, or they cut into manufacturer profit margins. Either way, it stings. Aircraft are even more aluminum intensive than cars. We're talking 80% of the airframe in some cases. Boeing, regional aircraft manufacturers, they all depend on consistent supplies of quality aluminum at predictable prices. A sudden 50% jump throws off every cost projection, every supply contract, every profit forecast. Walk around any modern building site and count the aluminum. Window frames, door systems, curtain walls, structural components, roofing materials. The construction industry has been using more aluminum for decades because it's durable, recyclable, and cost-effective. Hit construction material costs with a 50% tariff, and you're making housing more expensive at a time when affordability is already a crisis. This one hits directly at consumer prices. Your soda can, aluminum. Your beer can, aluminum. A beverage can industry that's already operating on razor-thin margins suddenly faces 50% higher material costs. Do they absorb it? Do they pass it to consumers? Either way, this gets personal. People notice when their six-pack gets more expensive. From power transmission equipment to household appliances, aluminum is everywhere. Wiring, transformers, heat sinks, components in everything from refrigerators to electric vehicles. The electrical equipment industry is massive, and most of it depends on affordable aluminum. Here's an interesting wrinkle. The military uses aluminum in aircraft, missiles, naval vessels, and countless defense systems. A tariff that makes it more expensive to build American military equipment is kind of working against stated policy goals. It's a tension that hasn't been fully resolved yet. This is where I need to stop and address one of the biggest misconceptions about how tariffs work, because it's critical to understanding the real impact of this policy. When people hear 50% tariff on Canadian aluminum, they often think Canada pays it, like money flows from Canada to the U.S. government as punishment. That's intuitive, but it's completely wrong. Here's what actually happens. The tariff is paid by the American importer. When a company in the U.S. brings in a shipment of Canadian aluminum, they have to pay that 50% tax to the U.S. government. That money comes out of their pocket, not Canada's. So what do importers do when their costs go up 50%? They raise prices. They raise prices on the aluminum they sell to manufacturers. Manufacturers, facing higher material costs, raise their prices to their customers. And eventually, inevitably, those costs make their way to consumers. This is a critical chain to understand. The tariff is paid by American importers, passed through American manufacturers, and ultimately borne by American consumers and businesses. When you hear someone say, "This tariff hurts Canada," be skeptical. The most direct and immediate hurt lands on American companies buying the aluminum, American manufacturers using it, and American consumers buying the finished products. This is one of the biggest misconceptions in trade policy, and it's essential to get it right if you want to understand what's actually going to happen to the American economy over the next months. Now, Canada isn't going to take this lying down. They have options, and they're already considering them. Canadian aluminum producers could pivot toward the European market. Europe has its own demand, and European buyers would be happy to source more Canadian aluminum at competitive prices. It takes time to establish new trade relationships and logistics networks, but it's possible. The same logic applies to Asia. China, India, Southeast Asia all have growing aluminum demand. Canadian producers could shift their focus toward these markets. Again, it's not instant, but it's a real option. Canada could invest in more downstream aluminum manufacturing, turning raw aluminum into finished products like cans, automotive parts, or construction materials. This adds value and keeps aluminum-related jobs and industries in Canada, even if raw aluminum exports drop. Here's the nuclear option that everyone's watching. Canada could impose its own tariffs on American goods. Whiskey, agricultural products, machinery, auto parts. Canada buys plenty of American exports. Hitting those imports with tariffs would hurt American exporters and create political pressure on the U.S. to back down. Diversification is always the goal in trade disputes. Canada could negotiate better terms with Mexico, Japan, South Korea, and other trading partners to reduce overall dependence on the U.S. market. These aren't hypotheticals. Canada is actively evaluating all of these. The question isn't whether Canada has options. It's whether any single option is enough to offset the loss of the American market, which is, after all, their largest customer. Let's be honest about who this tariff helps and who it hurts. Some U.S. aluminum producers might benefit. Domestic smelters that already exist could see increased demand as manufacturers seek alternatives to tariffed Canadian aluminum. If prices rise enough, and if those producers can scale up, domestic producers could capture additional market share and boost profits. Alternative global suppliers might win too. Companies sourcing from Australia, Norway, or Iceland could see increased demand as U.S. manufacturers shop around for non-Canadian sources. And here's an interesting one. Canadian companies that successfully diversify their exports away from the U.S. and build new markets elsewhere could actually strengthen their long-term position. They'd be less dependent on a single customer. U.S. automakers are looking at a significant hit. Their margins are already competitive. Adding 50% to material costs is a problem. Beverage companies, the ones selling cans and containers to consumers, are losers. That gets reflected in consumer prices or reduced profitability. Construction firms face higher material costs, which either reduces their competitiveness or forces them to raise prices on construction projects. American consumers lose through higher prices on cars, beverages, construction, and everything in between. And small manufacturers, companies that can't absorb 50% cost increases, might struggle significantly. They don't have the scale or the financial cushion that Boeing or General Motors have. Here's the uncomfortable truth. The industries that might benefit from this tariff are small and concentrated. The industries that lose are large, diverse, and affect the daily lives of millions of Americans. The math doesn't favor this policy when you look at the distribution of winners and losers. So where does this go from here? There are several scenarios playing out simultaneously, and honestly, it's hard to predict which one wins. Canada sits down with U.S. negotiators, and they work out a compromise. Maybe the tariff gets reduced to 25% or 30%. Maybe certain products get exempted. Maybe volume commitments get renegotiated. Trade disputes often end with both sides claiming victory and settling on something in the middle. U.S. manufacturers start making noise, loud noise, to their representatives in Congress. Automakers, manufacturers, aircraft makers, they all start arguing that this tariff is hurting American industry and American jobs. Political pressure builds. Some kind of relief mechanism emerges. Companies just adapt. They find new suppliers. They adjust their manufacturing processes. They reformulate their products to use less aluminum or different materials. Supply chains are incredibly flexible, and sometimes the best solution is just to work around the problem, rather than wait for politicians to solve it. The tariff stays in place, prices stay elevated. Companies absorb higher costs or pass them to consumers. The economy adjusts, but at a cost. This becomes the new normal. Canada imposes retaliatory tariffs. The U.S. responds with counter tariffs on Canadian goods. A trade war escalates. Supply chains get disrupted further. Economic uncertainty increases. Realistically, the answer is probably some combination of these. We're likely to see some negotiation, some lobbying, some supply chain adaptation, and probably some price increases that consumers notice. The coming months will be crucial. Watch for announcements from major automakers. Watch for congressional activity. Watch for news of new trade negotiations. These signals will tell you which scenario is actually unfolding. Here's what we need to understand. The 50% aluminum tariff is way more than a political headline. It's not just about trade politics or nationalist economic policy. This is a decision that could reshape the entire aluminum market in North America. The tariff's impact ripples across automobiles, aircraft, beverages, construction, electrical equipment, and defense manufacturing. It touches virtually every sector of the American economy. And the pain isn't evenly distributed. It's concentrated on the consumers and businesses that actually buy finished products. The biggest question, the real question, isn't whether Canada can adapt. Canada absolutely can. They'll find new markets, develop new relationships, and diversify their economy. Canada's survived trade disruptions before. The real question is this: can U.S. manufacturers absorb a 50% increase in material costs? Can automakers keep producing affordable cars? Can beverage companies keep prices stable? Can construction remain competitive? That's the test. Some will adapt brilliantly, others will struggle. Some will pass costs to consumers, others will absorb hits to their bottom line. And some might actually relocate operations to countries where aluminum is cheaper, which would be ironic given that the entire point of this tariff was supposed to be about protecting American manufacturing. The coming months will show us who ultimately bears the cost of this trade dispute. Will it be Canadian workers losing jobs? American manufacturers dealing with higher input costs? American consumers paying more for everything? Or will it be some combination of all three? We're about to find out. And that's the real story behind this tariff. It's not about aluminum prices. It's about who pays and how much pain the American economy is willing to absorb in pursuit of industrial policy goals.